This is Rick Rule for Rule Investment Media, sponsors of the 2024 Natural Resources Investment Symposium, held July 7 through 11 in Boca Raton, Florida, or from the comfort and convenience of your own home. Whether you attend personally or you attend online, please remember that we're going to give you between 50 and 60 hours of very intense programming, more than you can possibly absorb during the 4 days of the conference. To that end, conference tapes will be available so that you can revisit and relearn the material from the conference, and I urge you to utilize that resource. Further to that end, before the conference, I'm interviewing every exhibitor CEO and every speaker so that you can pay attention before the conference to those exhibitors and those speakers whose information is of particular interest to you. I urge you to review every single pre-conference interview so that you can allocate your time and allocate your capital more efficiently. Remember, too, that at our conference, unlike any other investment conference that I know of, every single public company issuer has been vetted. Our exhibitors aren't just advertisers, they're content too. And every single public company exhibitor is owned in my account or in accounts managed by me. The interview that you're about to hear is with a longtime friend and colleague of mine, Dave Cole, CEO of EMX Royalty. I'm delighted to say that I have been an EMX Royalty shareholder for probably 2 decades. So, Dave, thank you for two things. First of all, your ongoing efforts on behalf of EMX shareholders over 2 decades, and two, your ongoing support for the Natural Resources Investors Symposium and our boot camps. It's a pleasure to have you with us.
My pleasure, Rick. We really appreciate the opportunity to be here.
Dave, I feel like I've known you almost since you were in diapers. I mean, for a very, very long time. Tell us something about your professional history, what you've done, what you did before EMX, that type of thing. Tell us about Dave Cole from the point of view of exploration and business.
Well, if I were to go back to the very early days, my grandfather owned a placer mining company here in Colorado and taught me how to pan for gold and prospect. And so it was in my blood from the earliest of days in Colorado, working within the Colorado Mineral Belt. And he had placer claims on Clear Creek, just west of Denver. But moving on from there, I studied geology and ultimately got a master's degree in economic geology. Went to work for Newmont Mining Corporation for 18 and a half years, which was just a fantastic place to get fully exposed to the mining industry, and did early stage exploration all the way up through working underground and in open pit mines, and had an opportunity to get very well schooled by Newmont. Left Newmont Mining Corporation 21 years ago to co-found with you EMX Royalty Corporation, and it's been a wonderful adventure.
And if my memory serves me well, you started at Newmont as a toiling geologist and ended up country manager for at least 2 countries. Is that correct?
Yes, I started off collecting soil samples, and when I left, I was a country manager of Turkey, a region on the Tethyan metallogenic belt that I've always had a lot of admiration for the geology in that area, and we're still working in Turkey to this day.
I was introduced to you by a geologist who I have real high regard for, Borden Putnam, who told me when I was looking for a geologist, you could not find a harder working guy than Davy Cole. Borden's a pretty good worker himself, so it's interesting the high regard that you were held in the industry many, many years ago. Let's move on to EMX. I'm sorry, go ahead.
Oh, kind words. Thank you very much. I have a lot of respect for Borden. He taught me a lot. He was a good mentor.
Wonderful guy. Let's move on to EMX. One would suggest that there are actually 3 businesses in one company. A prospect generator, classic prospect generator, although you monetize your assets differently. A royalty acquirer and investor, and a merchant bank. Perhaps you could talk me through, as briefly as you can to do the subject justice, each business unit and how they work.
I'd be delighted to do that. I have passion around all 3. And what creates the most value is actually the synergy and integration of the 3. because it's the same group of entrepreneurial economic geologists and engineers working around the world that identify these opportunities. So that creates this distinct synergy. So because we're doing prospect generation work, we have these strong economic geologists in mineral belts around the world stationed in Fennoscandia, Australia, Tucson, Arizona, et cetera. And their primary objective is to acquire prospective mineral rights. And we do that copiously. We touch 5 million acres of mineral rights today. And we've cycled through many more millions of acres of mineral rights in the history of the company. We believe that the best way to actuate value and to be exposed to those mineral rights is to turn them into royalties over time. So that's how we execute the prospect generation business model. We acquire prospective mineral rights, we coalesce existing data, we create our own databases from working on those assets, illustrate prospectiveness, and then seek to sell that to an industry that's hungry for discovery opportunity in exchange for cash payments, share payments, and always a production royalty at the end of the day. And to be able to do that whilst we're also looking for value accretive royalty acquisitions. And I emphasize value accretive because we have one in the portfolio that we bought for $200,000 that's worth over $100 million. And that's a one data point that gives you an example of the type of value that you can create by executing the royalty acquisition in concert with royalty generation. David Harkwell, man, I have a huge amount of respect for, with Franco-Nevada, one time told me, he said, Dave, we really think that the integration of royalty generation and royalty acquisition is particularly powerful. We take it one step even further, and that same team that's working in these regions around the world occasionally come across an opportunity to make a private placement or to buy from the open market stock positions in companies where we feel that we cannot not buy the stock. And throughout our 21-year history, as you know, we have netted 55 million USD from our strategic investing, and that takes into account some that completely failed. We have some investments that have gone to zero. We have others that have been outsized wins, and the collective of that is 55 million US dollar gain. Those monies have been wrapped right back into royalty acquisition and royalty generation. I think it's a fantastic business combination.
So, one of the things that I really like about prospect generators is it reduces the due diligence I have to do. I don't care so much about my opinion of your properties, but I care a lot about the opinion of industry partners who are going to spend money on them. That's the purest form of due diligence, doing due diligence that accompanies a check. Tell me something about, historically, the joint venture partners that you've been able to attract, and tell us something about the joint venture partners who are currently drilling your properties on my behalf.
Yeah, but these will fall into two different camps. And both of these two camps, which I'll explain, provide other people's money, OPM, across our portfolio, which creates that optionality that we love so much. And they also employ their expertise across our portfolio. And so when we seek a partner to work on a particular property, for example, when Newmont worked on our assets in Haiti as one extreme example, it was their expertise to be able to work in a challenging environment that meant as much to us as the money that they're going to put into the ground. And Newmont's a good example of one group, and that is major mining houses that have a strong desire to find discovery opportunities to be able to continue to advance their reserve base. And so we do a lot of deals with major companies. We've done 6 deals with Rio Tinto in the last 4 years, the largest mining company in the world. We worked with Freeport, Barrick, Newmont, on down the list. And those deals typically do not have a share component. So those are deals that have typically annualized lease payments or advancement and royalty payments, work commitments, and always a royalty at the end of the day. The other group of folks that we work with here is a great group to work with, and these are the more entrepreneurial junior companies where we're vending these assets in commonly for a share component plus those other features that I've mentioned. And those share components have been distinctly accretive for us over the last 21 years. We've done quite well with our share portfolio.
What's the approximate market capitalization of EMX Royalty? What is somebody paying for all of this?
210 million USD is all. Yeah.
Okay, and so talk to me about what you get for 210 million USD. Tell me something about the assets that you think might justify that sum of money.
Well, we can start with the 2 generational copper assets in the portfolio. And I'm just delighted to be here in a situation today where we have exposure to multi-decade mine-lived copper assets. One, the Timok project, arguably our most valuable royalty in the portfolio. That is in Serbia, one of our first business units in the company, as I'm sure you recall. And we have a royalty there, which we grew organically, and another one that we purchased for the whopping sum of 200,000 Canadian dollars that has already paid 9.8 million USD whilst they're mining in the upper high grade zones. And that Xinjiang has announced an additional $3.8 billion capital expenditure to go in developing the lower porphyry zone, which is gargantuan. The resources shown on their website show it to be over 2.5 billion tons at 0.76% copper and 0.16 grams per gold, just in the lower zone. And that does not include the fact that that deposit, at its thickest and highest grade point, is fully open-ended down plunge. That's what we call discovery optionality. So this is a royalty it's paying today. It's going to pay a lot more in the future. If you look at what the analysts say that royalty is worth, it's worth nearly our entire market cap today just for that one royalty. Then let's move on to Caserones, and that one's copper gold. Let's move to Caserones. This is an operating mine operated by another family that you have a great deal of respect for, the Lundins, and they own 51% of the Caserones mine. We have a royalty on that mine. It's producing very nicely. Last year, it paid 10.4 million USD to us. So it's our largest current payer. Also has a multi-decade mine life. This one is copper and molybdenum. I'll point out that they have increased the reserves net of depletion from ongoing mining whilst they have had this project, in addition to the fact that the royalty footprint is a very large footprint that extends over multiple high priority targets. And Lundin announced a $15 million exploration budget in 24, Rick. And they specifically highlighted drilling of high-grade breccias that have been discovered within the Caserones pit at depth. That mineralization is still open at depth. And the immediately adjacent next door, fully within our royalty footprint, project called Angelica, or we would say Angelica, but Angelica. And that is a copper system where they've recently got into the sulfide system at depth. And we see immense discovery optionality there. And this term optionality is very important with respect to royalty valuation, as you know. We can look at the discounted cash flow analysis of the cash stream coming off these, come up with a financial engineering number for what they're worth. But when they really pay off is when they find a whole nother mine, or they double the size of the reserve of that mine. And all that exploration and development work comes at no cost to us, the royalty holders. That's why you want to own royalties. That's why you want to own royalty companies. So when you combine just those two assets, let alone the other 164 royalties within the portfolio, that comes up to a number substantially more than the $210 million market cap today. And if you look at the target price that H.C. Wainwright, for example, has on EMX, it's a multiple of the current share price.
Dave, thank you for 2 decades of striving on behalf of mineral exploration investors, particularly myself, of course. And thank you, too, for your ongoing support of the Natural Resource Investment Symposium and our boot camps. Tell our listeners, to the extent that they're interested in learning more about EMX, which they should be, how they reach you, either before or during the conference, who they should reach at the company, and how they reach that person.
Well, I'm available myself. Let's start there. So Dave Cole, you can email me at Dave, D-A-V-E, at emxroyalty.com. Furthermore, Scott Close is available. He's been with us 17 years, close friend, knows the company exceedingly well, and he's a great guy to yuck it up with and get all the skinny on the company. S. Close, S-C-L-O-S-E, at emxroyalty.com.
Dave, I look forward to hosting you in Boca Raton. It's been a good 2 decades, and I look forward to your ongoing success. Thank you so much.
Our distinct pleasure, Rick. Great to see you.